What are the risks? Well, right now, unlike 4 years ago, the economy is pretty clearly at full employment. The Trump administration has a plan to remove a lot of workers. So it's going to have excess demand for workers. That's natural. It also plans to put on a lot of tariffs, which will pull activity away from workers from where they are to some other activity which is protected. They want to close the current account deficit, the trade deficit. That will increase demand even more. So there's going to be a huge boost in demand and a contraction in supply. To economists, that means inflation. It's very plausible that inflation will return, and obviously the Fed is a bit concerned about that already. That could mean higher interest rates. And then you have two risks. Higher interest rates could slow the economy rather dramatically, but that may be less likely than that you begin to get real financial tensions. There's an immense amount of debt, public and private, right now. Public sector debt is exploding. It's well above 100% of GDP and rising. There's a lot of private sector debt as well. And the stock market is hugely highly valued. There are only two previous episodes in American history for the last 150 years when the stock market overall is as highly valued as it is today. If you add those things together, it's really not very difficult to imagine there will be quite significant shocks. And of course, the world is always unpredictable. There could be further conflicts, tensions, we don't know. But just looking at it now, the risk of overheating, and I should add the final thing, there could be quite significant tax cuts in this situation without offsetting spending cuts, which I think are quite unlikely. The fiscal deficit could get even bigger than 6% of GDP. And a fiscal deficit of 6% of GDP at full employment for a country that's growing 2% or 3, maybe 2.5%, that's pretty dicey.
You're saying that cuts in government spending are unlikely.
Yeah.
Trump now has a whole department with Musk in charge who are going to take the sword and slash government expenditure. Why do you think those won't account to very much?
Well, we're going to see. But the crucial thing is to understand the structure of the American budget. If you add it together, the core spending on health, Social Security, which is untouchable, debt interest, add all that together, you've already got more than 80% of spending. And the dominant part of the rest, overwhelmingly dominant, is defense, which is a little under 15%, a sixth roughly of government spending. So you have to eliminate the rest, which is all the spending on support of science, most spending on things like infrastructure. They've just announced a huge spending on AI. Where's that going to come from in this budget? If you add it up, if they cut more than 1% of GDP on spending, it will be remarkable. Even 2%. Well, that will still leave them with with a fiscal deficit of 4 to 5% of GDP. The problem is that the only real way to cut spending is to cut the spending on the items that Trump's base depends on. And I don't think there's any sign that he wants to do that. So I just don't think the arithmetic doesn't add up.